Hello and welcome to the Gold, Goats, and Guns podcast for May 11th, 2023. My name is Tom Luongo, and we have a lot to talk about. It is episode 143, and I have the great pleasure of having back my new best friend, Vince Lanci. I just have the best time when I sit down and chat with Vince. To be honest with you, we've already been on the call for half an hour before I even turned on the record button. It's been a great time. Vince is here today. We're going to chat about all manner of things. He was on episode, I think, 135, and we talked about a path back to the gold standard. Today, I'm not really quite sure what we're going to talk about, but I know it's going to be at least lively. Vince, welcome. Enjoy. How are you, my friend?
Thanks. I'm good. Thank you. Thanks for having me back. Yeah, I mean, we can talk about a lot of things. We can talk about progress since the conversation before about East-West movement. I definitely want to talk about something that you were alluding to regarding Europe again, because I think the path needs to be updated because I see progress in that context. And we could talk about St. Bart's hotel owners, things like that.
Yeah, we can, So, but I think what we should start is you and I have been going back and forth on some of the finer points about gold and whatnot in the last couple of weeks on Twitter.
Right.
And actually, an interesting conversation that we were having with Luke Roman about all of this, and it was an interesting thing to me because it was clear that we have a fundamental kind of, I think, a fundamental deficit within oppositional FinTwit. The better way of kind of alternative FinTwit, which is there are the gold bulls, the hyper gold bulls, say Brent Johnson over at Santiago on dollar milkshake theory. And then you have the extreme dollar bears, the Peter Schiffs and all those guys. And then you have and then you have the rest of the people that start to slot in. And then you have someone like yourself and I don't mean to put words in your mouth, but you and me, we kind of lay in the middle going, yeah, the dollar is in trouble, but then again, where are the other alternatives? Like you can see it from both sides, and that we understand that the situation is fluid, and that there's, one of the things I think you and I talked about previously is that there is kind of an order to this has to happen. And so I think if we start there, and one of the things that came into this conversation with us and Luke Roman on Twitter was like this idea that, the counter move between Powell and Europe just seemed really discordant and odd, and I think it brought up something that hadn't been really kind of discussed before. So, and kind of a deficit. So, if you want to go with that, and see what we lead.
I have questions to ask you. So, paint the big picture, the broad strokes that I know to make sure that I'm on the right page, because we've discussed this before, and you're mapping your day-to-day chart of progress. I'm just looking every so often. So you're more intimate with the changes. But that's what I got out of that interaction with Luke, and I was a sidebar on it. But leading into that interaction, I was of the opinion, and I think this is an echo of some of the things you're saying. Before I had even spoken with you, I knew that the United States Fed, in combination with other Feds, discussed policy. So all the other G7 central banks were on the same page. That's a hallmark of globalism. So they're coordinated. Maybe you go first. Maybe I go first. Maybe you handle your debt one way and I handle it another way, but we both handle our debt. And we make sure interest rates are at least coordinated. The point is, we're friends. We don't do anything without letting the other person know.
Yeah.
And if we're going to hurt you inadvertently, we're going to do something to correct it. Okay. That became obvious to me years ago with with Bernanke and Japan. He would go there, they would do something. I'm like, what the hell's going on here? It was like Wall Street, like a Bud Fox move. Oh, look, he's there. Are they going to raise rates or lower rates tomorrow? So anyway, so I had seen that as a picture. And one of the things that I've been noticing and talking about after reading a book called Collapsity Complex by Tainter was that the world, whether it be post-COVID or became more obvious post-COVID, was collapsing in complexity. And what was evolving or de-evolving was a more mercantilist behavior, regional. I care about this, I care about that. Very, very existential threats type of stuff. And along with that, and now we're hearkening back to something the head of Goldman Sachs trading years ago said to me. He goes, oh yeah, we talk to the central banks talk to each other all the time, dude. He goes, And when they don't get along, it's bad. And that's how problems in 71. That's how, like, when we get out of sync, there's a problem. That's what he said then. But what he should have said is, because there wasn't a problem back, this is in the 90s. He goes, when we get out of sync, there's a problem. Well, what I think he meant to say was, if there's a problem, we can get out of sync. And, okay, so that's ahead, and then you and I have a conversation about it. You know, and I've seen many of your conversations, and it brings me to saying, like, when you had said that whole, the euro, this is the first time, the euro dollar, who the fuck cares about that? He doesn't know what he's talking about. This is me thinking about you. It's like, obviously respectfully, but saying, who cares about
Fair enough, dude. You can piss off about, I mean, although I have my big boy pants on, I'm good. It's not
but you know where this is, you know.
I know.
Right. Okay. So I started looking at the banks and I went, I can't figure out Europe versus the US, because ideologically, I thought we were woke and they were woke. I'm using that word, right?
Right.
I looked at Japan and I went, we're definitely on the same page with Japan. We're still there. I don't know what's going on in Europe. So I just keep, it's like a itch. You just keep scratching. I'm like, are they disagreeing? Are we front running them? And with little policy, little micro and macro moves. And then I revisited the whole euro dollar thing. I went, oh shit. And my take on, in a macro version of what's going on in the US might explain me wrapping my head totally around it. Every 25 basis points the Fed raises destroys, I'm simplifying it, destroys an undercapitalized, poorly managed, for whatever reason, crypto, I don't care, NFTs, bank, okay? Right. What is Europe? Europe is a bank that borrows from the Fed.
Yeah.
They are. So we're raising rates. They have to raise rates. If they don't raise rates, then capital flows into dollars.
Yes.
Out of there. And now I'm going, and I'd already been on board with you at this point. I'm like, but now I'm like, where's the micro that explains this flow? Kind of like a Daniel DiMartino conversation.
Right.
And I went, where's the, and I went, oh shit, we raised 25 basis points. That bank goes under, right? The Fed, before they raise 25 basis points, another bank goes under. I'm like, oh shit. People are just like crying uncle. I went, Europe is crying uncle. They keep raising rates to keep capital from flowing out. And then from other people, I'm like, we all learned that gold could be revalued. But we'll talk about gold in a second. But
sure.
But this whole thing, and I don't know when it started in your head, but it really must have started with the whole Europe started shitting themselves when we said we were going off of LIBOR. That had to be.
I think so, but I wasn't following it then from that perspective. I really was kind of, in 2019, 2020, I was still in the mode of, the Fed is the Fed. They hate us all and they're trying to destroy us all. They're trying to kill us.
That was me.
I was sitting there retweeting, Powell with the printer go birth memes. Like I'm okay with that. But it was the day, and I tell you, the day I watched the euro drop 3 cents when Powell raises the reverse repo payout rate 5 basis points above the Fed funds rate. Right. That was the day I went. And then all of these things that I had heard, blogs from Martin Armstrong, these little things about Lagarde and Powell having a tiff 2 weeks earlier at the Green Seas Summit over coordinating central bank policy for climate change. I started really, like all of this stuff kind of just, I had this massive mimetic collapse. And I just, it was like, there was that moment. It was like that eureka moment in Act 6 of every episode of House, right? That's what happened to me. And I went, are you fucking kidding? Could Powell be trying to, and then I had to sit down and literally start mapping out the directional, the trade. Give me a trade, give me a mechanism, how this would start to, what it would do. And then it just hit me and I went, oh, he's trying to drain the leverage in the offshore dollar markets.
Right. And when you look at it from another perspective, it's like, well, yeah, if inflation's a risk, he's got to bring those dollars home before they slosh. All the, I'm getting a little bit excited here because I know that we're on the same, we're going toward the same destination from not exactly the same path.
Right.
As people de-dollarize globally, he's got to call that shit back.
Yeah.
Not just about domestic inflation. He's got to pull those dollars back. And all the hyperinflationistas are screaming because now they may be wrong. Right.
And this is the thing that pisses me off about the alternative financial press. This is what pisses me off about zero hedge at this point, because they want to be right more than they want things to be fixed.
Right. Right.
And I'm not on board with that anymore, dude. I'm like, I'm sorry, and I'm willing to call people out because again, we're all facing existential threat. I'm
Right.
facing existential threat. They want to
Right.
destroy my society. These
Right.
fucking people, right? So
What society? Now I have to ask you,
U.S. like the United States
oh,
as a legal,
I thought there was
as a legal home for people who don't want to be, don't want to eat bugs, live in a fucking pod and say Sig Heil to fucking Klaus Schwab. That's the world I don't want to live in. Minority Report with more Germans, right?
No, I said, when you said society, here's why I said society, because I just watched Black Adam last night and it sucked. But the justice is, I was like, what society is he talking about? Anyway, that shows you.
Well, actually, I didn't mind. I thought Black Adam was okay. I didn't think it was terrible, but I thought they were trying really hard to gently critique U.S. foreign policy as much as.
Oh my God!
Yeah.
Oh my God! Halfway through it, I said to myself, "Oh, okay, they're doing the whole let's try and be like the Marvel, and then I went, and then I started hearing these mini ideological speeches, and I went, because the camera would stop moving,
yeah.
And I'm like,
yeah, and there was all in the mouth of the beautiful Sarah Shahi, and I'm like, I'm okay with this. Like,
right, exactly. You nailed it. Anyway, but that's the point. Ideology is everywhere, unfortunately. Yeah. Anyway, so back to
back to where we were, which is that we were on our path to how was gold going to get revalued, right? And so I think that part of the Twitter thread that we were having with Luke was this: we were like working out the path to the revaluation of gold. And
yeah, so explain that. I got distracted at the moment. I should have paid attention there. So what was the gist of what you were saying?
Well, what I've been trying to interject into this narrative is that, okay, if I'm right about the Fed raising interest rates to soak up all the dollars and protect the United States, and the transition from LIBOR to SOFR and get rid of the Bank of England and the effect of the British crown and all these freaking evil people, right? And you want to start bringing this stuff home and having the Fed set monetary policy as opposed to Wall Street, right? Or as opposed to the private equity part of Wall Street, not the money center banks, which are a different breed of folks.
Understood.
And you probably know that much better than I do, because
no. But I'll just, in one sentence, I'll say to the people that I think that may not plug into your style of thought. The private equity guys are about financialization.
Yes.
They're about leverage, right? And Wall Street, when everything is going good, by that I mean central banks, right? The central bank when things are going good are with private equity. But the split is now between private equity types, leverage, financialization, the ideology of easy money versus the Fed, which on some level recognizes the existential threat to our way of life. I mean,
because that too much easy money engenders. So what, where I think I got into this conversation when Luke said something along the lines of that the gold will get revalued when the Europeans will allow the price of gold to rise in order to offset the destruction of their balance sheet. And I said, what will bake your noodle is when the Fed does the exact same damn thing. And but this is a point that I've been making for 10 years, that the difference between the Fed and the ECB is that the Fed doesn't mark any of its assets to market, and the ECB does. But that also means that the ECB is then fundamentally, as an organization, advertising how much they're vulnerable to a rate shock, which they've just undergone. Right.
Because, and to be fair, I'm going to side with them for a second.
Sure.
To be fair, and I'm not saying this is good, but it's to be fair. To be fair, they don't have fiscal unity. They can't tax across borders. All their policy shifts for the whole European Union have to be monetary. And they're not the global reserve currency. They need some kind of fucking anchor to justify their debt. We don't have to do that, which, thank God.
Yeah, well, I mean, and this is one of those things that we have to remind ourselves that, everybody who gets into this, who finally has the red pill, swallows the red pill or the black pill, that, oh my God, it's the central banks that rule the world. Oh my God. And I was one of those people. I just got there a long, long time ago. But as these ideas percolate into further and further out, into the zeitgeist of the normal person, and they begin to understand this stuff, and we're trying to explain it to them, the first natural thing that they do is they go down the hardcore Austro-libertarian, and the Fed route, and the Fed is evil route. And I'm like, and then they assume that all central banks are the same.
Right.
They're not.
No,
the ECB is fundamentally structured differently. Martin Armstrong had to beat this point in my head for years before I accepted it.
Right.
That the ECB is actually the weak link here. They are a weak organization relative to the Federal Reserve. And even the post FDR Federal Reserve, which is actually far weaker as an organization than the pre-FDR Federal Reserve when we had regional interest rates. And the Fed and the 12 regional banks were actually far more powerful individually. Right? That's a better system than those. Yes.
Right. Federation stuff. Right. Yes. Exactly.
Yeah. More federation of co-equals rather than the New York Fed runs everything.
Right. Yeah. And that's funny because the Martin Armstrong stuff, which I haven't read, I used to read him between 93 and 2002. I read him religiously. And, but from a different perspective, yeah. I mean, for me, I stopped looking when I realized that Europe couldn't tax across borders. So I went, the market structure is flawed. And therefore, to your point, the banking unity has to be flawed as well.
Yeah. Exactly.
I remember in 2009, here's something to throw at you. I remember in 2009, during 2011, during the European crisis, right? The whole Brexit thing, Brexit thing, right? So at that point, I was very aware, but I was just learning about global macro as opposed to geopolitics, right? And I was like, so what's going on over there? I mean, I know that and this is me with I understand about taxation and monetary policy. I was saying, well, why does everybody, this is me, why does everybody care? I mean, the Bundesbank, every country issues their own bonds, right? And Greek bonds are worth shit. So why don't you just, but if you put your money in euros, then you're safe because, meaning I knew that they couldn't tax cross borders, but here's what happened. It got so bad in a panic that when you pick up a dollar bill, right, it says issued by this is your whole federation concept, right? This is going to drive home. In a crisis, people don't deal with any risk. So,
period.
So it got so bad in Greece and probably regions around there, and this was reported to me. I went, oh, now I understand what it's like to be fucking afraid for your life. Not Germans. Greeks were looking at euros, not bonds, and saying, which bank issued the euro?
Right.
And if it was a Greek bank or an Italian bank, no. They were hoarding German Bundesbank issued euros. And I'm like,
I didn't know, by the way. Yes, that's
but would we not do that? Because rules work until they don't, and then they say, okay, you get 100 cents on the dollar for your Bundesbank euros. You'll get 9. I mean, that's it.
You'll get 85. You'll get 60 cents on the dollar for your Greek bank, your Bank of Greece notes. Yes,
right. And that's when I said, oh, these guys really don't fucking like each other at all if they can't keep everyone on the same page.
Right.
And to your point about federation, what if I never accepted dollars issued from the Minneapolis Bank or something like that? Anyway, the point is they're nowhere near us in terms of the unity and strength.
Right.
And anyway, I just wanted to throw that in there.
Yeah, no, it's very important. And so, and like I said, and then, so I think in the context of the conversation, Luke came back with what I just felt was like, it's like one of these things that I had to call him out on it, and not because I dislike Luke or anything like that. That's not. I like Luke a lot. I think he does very good work in the space, but it was to highlight a fundamental deficiency. He came back and said, "Well, then Lagarde will just print euros and buy gold with it, and then what's Powell's next move?" I'm like, "Oh, nothing. Sit back and watch Europe collapse." Because they like the European banking system could handle her buying. She doesn't print euros.
Right. It's not.
The ECB doesn't print the euros. The Bank of Italy prints the euros. The Bundesbank prints the euros. So your point is
it's all split.
Right. So Lagarde doesn't have that option. All she can do is move move assets and liabilities around in the various member central banks through her central bank balance sheet. That's one, which I didn't even say to Luke at that point. I was like, no, even if she were to do that, under what On God's green earth, would you ever expect her to do that?
But
She's not going to.
Right. Forgetting about the U.S. for a second.
Sure.
I want to just throw this in there. Let's say that she could. Let's say she got all the banks on the same page.
Right.
And they said, they were in the process of trying that. I remember right before Basel III came out, they were like, okay, all central banks in regional countries are not allowed to carry a gold account anymore. Did you know that? Like, that's
right.
You may not have known that, but it wasn't really important. But what happened was regional banks used to manage their own gold.
Right.
And then the ECB said, no more of that. We'll do that. They centralized all gold management. That doesn't mean that they centralized control, but they were minimizing rebel behavior by other central banks.
Yes.
For my question is, let's assume that Lagarde had the authority to do that.
Mm-hmm.
Does that signal to the market if she starts buying gold in euros? That's what I was thinking when I was reading it. I was like, she can't do that.
Well, but what would it signal to the market? It would signal to the market that they're inflating the currency to buy gold. Like, right. And okay, so that means they don't have enough gold to cover their liabilities. That means their assets, because gold is now held in the balance sheet as an asset, and they're trying to prop up their balance sheet by raising an appreciating asset's value. Right. And by putting their thumb on the scale, which is kind of what Luke was getting at. This is how we get the $35,000 gold. I said, stop thinking about, all I said back to Luke was, Luke, I think you're trying too hard to win an argument about how to destroy the dollar, as opposed to thinking about how the dollar can survive this. Because the obvious play at that point is for Powell to go, thank you. You're giving us, who do you think has more balance sheet room with a rising gold price? Right. The United States or Europe? Europe's got 85% of its assets are worth shit.
I think. Well, that's the thing. While we're still the GRC, we're going to have that luxury. And just echoing, I think a lot of people, and myself included, say, well, the Fed doesn't want. This is me 5 years ago.
Sure,
and I was right. The Fed. This is going back to Greenspan. We don't want the price of gold going up, because it shows competition with the U.S. dollar for global dominance of money. Therefore, and this is me with my Federal Reserve tinfoil hat on, and I'm right, we're going to keep the price of gold down, and we're not going to do it. Forget about manipulation, which is another issue altogether. But our policies will keep the price of gold down. Okay, so now we're moving forward, and that would manifest. Gold would never go up more than 2% in a day. And when it did, it just fucking collapsed 3 days later. Okay, now we're moving forward, and I'm still holding that belief.
Right.
The Fed hates gold. The Fed hates gold. And I go, wait a minute. And the first time, and this is like fan club stuff for you, but the first time I thought about that was when I went, okay, Europe, and I use the word mark to market differently than everyone, but I'll use it the proper way for you guys. Europe marks their gold to market, but does not account for it on their sheet. They mark it in an off-balance sheet. So they don't really bring it on their balance sheet. They're like, we know that we have this much profits, but we're not counting. Right? The U.S. doesn't even market to market. And so I said to myself, if you're, and you see this all the time in weak hands and strong hands, the weak hand, which in my opinion is Europe, if the weak hand has to go to gold, right? Or wherever the weak hand does, if it drives the price of gold up, it's so they can survive. We may be pissed that they're doing it, but it doesn't materially hurt us. What hurts us is our strength of balance sheet without remonetizing gold on our side, right? So let's say the U.S. is, at level 100, right? And let's say Europe's balance sheet is at level 70. Well, if they revalue gold and bring it on their balance sheet, that brings them up to level 85, and we're still at level 100. But we're pissed that they did
we actually go up because we have more dollars on the balance sheet.
Well, our strength, right? Exactly. So that's the thing. So maybe on a relative value arbitrage, it's like, Europe is doing better than the U.S. now because they mark their shit to market, and we're not. Well, we still have that gunpowder. We don't have to worry about that. And every fucking dollar-based asset in the world is going to do better because of that as well.
Yep. And that's going to give us the ability to issue more dollar-denominated debt at favorable interest rates. This is the thing that drives me batty. Like I said to you the other day when we were chatting on Twitter and about this, and I said, and there's Germany. Like last week, it was German industrial production down 10% year over year and down 2.5% month over month. It was crushed. And then German inflation came in at 7.2%. And yet the German Bund continues because Christine Lagarde sits on the freaking yield spreads at 1.15% premium to a US 10-year bond. Why? Right. Because the Japanese are still coordinating bank policy and allowing people to run the short yen carry trade at the 10-year because Ueda hasn't gotten Ueda's balls haven't dropped yet. And it doesn't have any peach fuzz down there yet. There's soon. And right after LIBOR goes away, I fully expect the Bank of Japan to give up yield curve control. But he'll do so when he actually has to drain, when he has to actually start dealing with it. But right now, if you watch during all the banking crisis stuff, what you've been seeing is the Japanese yen, the Japanese 10-year dropped below the limit. He doesn't have to defend it right now. So there's no point for him to give up yield curve control because he doesn't have to defend it. He doesn't have to control the yield.
That's what
because the yen carry trades are unwinding very, very quickly.
Right. And by the way, that's the purpose, whether you hate the Fed or hate all Feds or not, but that's the purpose, and I say this optimistically, with yield curve control. You don't mind inflation, but you want to keep a lid on it as it goes up. So it's a QE, but you're taking on the 10-year, let's say 30-year bond or 100-year bond, I don't care. Right. I'll let the yield go up to here, but no more. And you do that, and you do it long enough, and you wait them out, you bluff enough pots, and then people slowly start migrating their yield curve positions, and you get these carry trades unwinding.
Yes.
And so first, it gets tested.
Yes.
It gets tested. And then the new guy comes in, and they're like, oh, we're going to abandon yield curve control, and the market did not test it, and the yen strengthened. And I went, well, why would he abandon it? Because I said he's not going to, and I don't have a reason for this yet, but it's an intuition. He's not going to abandon yield curve control until the U.S. needs to do it. It's like a rotation.
Well, maybe. You see, here's the thing. Is it that way, or is it? This is the way I used to think about it. I don't know. For a year and a half, I said, well, and then BOJ is always there as the Fed's bitch. Being Powell's, Kuroda gets to be Powell's wingman. When Powell wants a stronger dollar, then we get more yield curve more yield curve control. And when he wants a weaker dollar, he get less yield control. He plays fast and loose. And then I stopped and I said, no. The coordinated central bank policy of the Bernanke-Yellen years was in order to allow for the massive expansion of the power of the European Central Bank. Right. That's the last pillar of that system that's allowing Europe to continue to run the scam that their debt is better than ours. Who on God's green earth believes that Italian debt should only be trading at like 50 to 70 basis points above U.S. debt? Are you out of your fucking mind? And you call yourself a risk assessor?
Right. How does that
happen? Like what? I mean, seriously, I don't know much about this shit. I feel like the Pope. I don't know much about art, but I know what I like. I don't know much about bonds, but that's fucking stupid.
Just at a simplest level, when you think about it, when Europe was going NERP, we wouldn't go below ZERP. Right? We wouldn't go below zero. We zero bound, and that saved us. If things get bad, that's a lot of money that we're not losing in NERP bonds on our balance sheet that we bought back.
Right. And well, we as a global reserve currency, we couldn't go NERP. Like everybody said it. Everybody said it. Snyder said it. Zero Hedge said it. I said it. We all said it. There's no way. The minute they go NERP, we go negative. That's it. The global reserve currency is over. And yet there were people screaming about it. And it's the complete everyday usual suspects of all the worst globalists you've ever heard in your life.
Wait, Rogoff? He's one?
Yep. That's Larry Summers,
Rogoff, and
Robert Rubin.
Right, exactly. Right, people. Right, exactly. People
that those guys, the Clintonistas, the Rhodes Scholars. As I did a podcast 2 days ago with Matt Ehret, and I just let him go nuts on the history of the British Crown and its effect on U.S. policy. I just let him go. I just reined him in and stayed away from some of the stuff about his love of Uncle Joe Stalin. And I know, let's not go there, Matt. Let's just keep talking about let's just keep talking about our grudging appreciation for Uncle Joe Stalin. I'm like, hey, let's get back to talking about King Charles III. Let's do that. So Stalin's like the only person worse than Stalin is Mao. They don't get the headlines they deserve for being. The way I framed it to Matt, just as an aside, it was what I said to my patrons in the in the GG&G newsletter for I think May.
Right.
I was talking about the factions. I said, let's look at the neocons in the U.S. and Britain versus the Davos neo-feudalists, and I'm like, it's basically Trotsky versus Stalin all over again. We got the Trotskyites here in the United States and Britain, and we've got the Stalinists in Davos. It's no different. It's just Uncle Joe versus cousin Leo. Like it's not that tough.
Right, but see, I never did the link U.S. to Europe. I went like this. I went Trotsky. Okay, Trotskyists became Woodrow Wilson Democrats.
Yeah.
They needed democracy.
Who then became Buckley conservatives. Oh, by the way, and today are Bill Kristol and all those guys. And
then they became I think they called them the Vulcans too. And then they became neocons. And now they're probably Democrats again. I have no idea.
Yeah, well, they're on both sides of the aisle because I think Hillary Clinton, the Clintons have been like card carrying, like high priests of the neoconservatives for and then there's the neoliberal order, but it's not that's the EU crowd, and they're slightly different. But it all depends on who you're talking to. Like when you're talking to American, conservatives, they're neocons. When you talk to European Marxists, they're neoliberals. And the truth of the matter is that it's all just evil corporatism, and it's all just evil communism of different flavors. And they're still fighting it out 120 years later. When the whole thing is that Marxism sucks, guys. It doesn't work.
It's a false division of left and right, right? Liberal. Well, all it really is people who like to be in permanent chaos. That's
because they get permanent power from it and permanent opportunity.
Right, exactly. So let's start a revolution. That's
It's like it's like I've gotten they're never ever the Trotskyites are never ever done trying to pacify the world. Like there's always like it's Captain Redlegs from the Outlaw Josie Wales. Doing good ain't got no end.
I'm gonna throw this out there. That the Redlegs guy, I totally know who you mean there. Trotskyites, neocons, all of these people have the same brain deformity. And it's probably the deformity that we experience when we FOMO. It's
Ready?
the same.
Ready?
It's like
I have the punchline. I have the punchline for you, Vince. Ready? It's called being a Yankee.
Right. That's right. I mean, the people who came to this country were looking to start shit anyway.
It's just the older I get, I'm like, and then I'm just Yankees. Right. What are you describing, Yankees? I got it now. And being an unreconstructed Southerner in training is the kind of the way I like to put it. There you go. But then again, but the South was manipulated by the British Crown into, like all this. So this stuff is also unbelievably complex, and it's hard to, they always wind up putting you into this ugly Hobson's choice between having to back, one group of distasteful fucking assholes versus another group of distasteful fucking assholes.
Right.
And how about can we just go, can I just raise my kids and you guys shut the fuck up? It'd be nice.
And that's why the yardsticks that most of us, myself included, generally measure events throughout the world right now are not appropriate. We in general, human beings in general, are trained at measuring micro. We're measuring. Well, the numbers don't work, therefore Lagarde won't do that. No, they're beyond that. They're all triggered, and they're all looking at existential threats.
Yes.
And so the secular geopolitical realm is driving things right now.
Yeah,
you can
absolutely.
Math and macro if the rest of the world is safe, and nothing is safe. And so, I don't care about that. Like for example, why are they buying? Like to your point about gold. Suppose the ECB just said we're going to print money and buy Apple. What would you do? I would buy Apple.
Right.
I would euros. I mean, it's that fucking simple.
Because it's the same thing with QE. It's why QE is deflationary.
Yeah.
Dude. It's the same thing. You just front run the trade.
That's right.
So we'll just front run the trade. Oh, look, the ECB's buying. I should buy because the price is going up, and then everybody else gets in, and then it becomes a mania, and then gold overshoots, and the Muppets get fleeced. And this is the gig. I mean, again, and the Fed's sitting back going, they're just sitting back like Johnny Bench going, I'm catching fastballs. Thank you. Keep adding to my balance sheet. Keep making it easier for me to do QT. I'm good. Have a nice day. Oh, by the way, we went to 6% because we can. We have the balance sheet room. Oh, and by the way, you're gonna have to buy gold faster. And then there's not enough on the market. And then no one will. And then there's the assumption that they'll even sell it. Like the ECB can go out there and put a bid out there. And who's going to buy? Who are they going to sell? Who's going to sell it to them?
Right.
Under those circumstances, when 275 tons a year that the Russians produce doesn't leave the country, when 350 tons a year that the Chinese produce don't leave the country.
That's right.
And guess what's going to happen in the United States with the 300 or 400 tons a year that we produce? You think it's going to leave the country?
No, those miners are nationalized, whether we know it or not.
Yeah, exactly.
The government owns an option on them. It's like, that gold is mine. And I think that I believe, I don't have any evidence. A lot of the people that listen and read my stuff are very mine oriented. And the main reason that I stay away from mines is because the fundamentals elude me, because the management is so particular about how the manager does their work. It's not very fundamental as far as but I think one of the reasons that miners stay at a discount is because there is that thing laying out there. I mean, if Venezuela can nationalize their mines, we certainly can. If not nationalize, don't think in black and white terms, folks. We can certainly say we get 20% of your gold production per year, period. And once that happens,
we can just have a bid. All that has to really happen is that the bids just come in. The bids just
domestic free market. Yeah. Right, exactly.
It's not that hard. Like it's, so this is going to be a fun one. Let's shift gears a little bit. I think we've got our handle on this. Gold will get revalued because it can. And when I came back to Luke and I said that, and he kind of got back to me, I said, last thing on this point, on the story, because this was really instructive about a great number of things, I think, because it helped understand, it helped illuminate some of our, everybody's, not just the thought process, sometimes deficiencies, yada, yada, yada. So, when, he said, I don't, he said, just, but, I said, well, Powell's going to do the same. And he's like, I don't understand. I'm like, what do you mean by that? I said, Powell is going to have to, follow the BRICS when they remonetize gold, because they're already in the process of doing so.
Yes, that has to happen.
Right. So, and that's what I said. And I just said it in kind of cryptic terms. I said, look, Powell is going to have to, follow, when the BRICS do it, Powell's going to have to follow along. He's like, what do you mean? I'm like, he's going to have to remonetize gold, and Lagarde is going to be dragged kicking and screaming into this, because Lagarde is an inflationist. They want to do everything imaginable in Europe to decouple the world from gold and from opportunity cost. They want complete control. This is the to your point about ideology, right? That's the intention. So Powell is being very practical, and I think you can see it in the way we're working it through. So go ahead.
Okay, so you made a comment. Now you came at it from as we said, if the BRICS do it, then the U.S. will do it.
Mm-hmm.
Okay, so and your thought process that got there is different than mine, but I'm going to give you another thought process.
Sure.
Because based on going back down to the granular. Okay.
Great.
Starting with mercantilism, when countries don't trust each other anymore, they put a wall up. Let's say there's two countries. They don't trust each other. Goods don't travel freely. People, it's USSR, USA stuff. But you will trade if you can agree on the money. When the people don't agree, they must find out what they agree on. And the money they will agree on, because they all have it and they all value it the same way, is gold. Mm-hmm. Bitcoin, day down the road, if you believe that.
Sure.
All right. So now you have the world splitting east and west. So let's call it BRICS and G7. No, not G7. Let's say BRICS and US. I want to keep Europe out of this. All right. So BRICS and US, right? The BRICS, and I want to be clear about this, because this is what's fucking happening. Okay. I'm not saying that we'll succeed. I'm not saying we won't do what we can to undermine it or delay it, but this is what's happening.
Yes.
If you're in the BRICS region, and this is like combinations, Zoltan Pozar and shit that I read and some original thoughts. If you're in the BRICS region and you're looking at each other saying, I trust you more than the USA, but I don't trust you. So I want to make sure that we agree on our money. They all have gold, or most of them have gold. China has been accumulating it for years. And they say, okay, we'll use gold, because we need something that gives us all the security of the US dollar, but does not have the baggage of the US manipulation, in their opinion. Okay, so they all agree on gold. And now I'm going to throw this at you. This is U.S. Fed mentality, bad Fed. But we don't want gold to be the thing that trades. We want to continue trade. I'm going to work right to the U.S. on this.
Mhm.
We don't want the thing that trades in gold. We want to trade in our own currency. We want to be nationalist. We want to be like, my currency's good. We want to convey strength. And so they say, well, I'll trade in yuan, you'll trade in rubles, but we'll have gold underneath it. So what you're creating is a mercantilist system for international trade in the BRICS Union, union, for lack of a better word, right? That's fucking mercantilism, all right? And there's other stuff that goes with it, but that's a mercantilist behavior so that they can continue trading in a low trust world. Fine, okay. So then I'm reading some Zoltan shit, rereading, I should say. It takes like a million years to get through that stuff. And I go, oh, okay. So there's a link in one of his posts, and it's to a platform. And I go to the link, and it shows me a 2-minute. I put that video out there. It's a 2-minute video of there's many of them, right? We don't know who's going to win. Is it going to be Ford or Studebaker or whatever? But one of them has 4 regions, like 4 federal regions. They all happen to be Asian. And they're going to facilitate, and you get into the whole guts of it, they're going to facilitate trade between yuan and rubles through this bridge called an M bridge. And that's one of the examples. And the M bridge is basically going to make sure that using blockchain, assuming we're using gold, but we're going to use other stuff too, but they're going to fucking start with gold.
Of course.
Make sure you have gold, make sure you have the gold, which by the way is an expansion of something I saw in 2017. And now I'll go, okay, that's their platform.
Yep.
Now, this is what I don't think people understand. When Zoltan talks about Bretton Woods 3, he's not talking about them. He's not talking about what they're doing. He's talking about, to your point, he's talking about what we're going to have to do to trade with them. Yep. So let's pretend that the BRICS, they're not, but let's pretend that the BRICS are as strong as the U.S. and partners that we like today. Let's pretend they're on completely equal footing, or at the very least, they don't want to have a fucking global war.
Right.
They need trade. We need to buy caviar from Russia. They need to buy Lee jeans. Okay, let's just say that needs to happen. Well, what do we agree on? Well, in the BRICS, they're like, we don't want dollars. And we're like, well, we're not taking fucking yuan or rubles, right? You agree on gold, okay? Or you agree on a basket, 30% gold, 30% dollars, 20%, I don't know, fucking fish eggs. Who cares? But you agree on a basket, and the basket has to be agreeable to everyone. Now, how does that manifest? When the BRICS, by the way, the technology's there, the will is there. What's not there yet, this is all you have to look for right now, is the network. When they get enough people on the network that they trust, then they do it. It worked Russia to China. Now you go, these people, I want to join. And I go, okay, now you're basically
Russia to China, Iran to Russia, India to Russia, or probably through a UAE intermediary, Saudi to the China. The network is building slowly but surely. Why did they arrest Imran Khan the other day? Because obviously they don't want a Pakistani national, breaking down the barrier between Pakistan and India so that they can unite and bring Belt and Road all the way across Asia to build not only the monetary network but the trade network, because Pakistan is the key to that.
And now we're in the geopolitical aspect. Like another example is the very recent Russia saying we're not going to take rupees, we'll only take yuan, which implies that they want them to be full BRICS partners, not just guys. So everyone's trying to move to the yuan, which means to move to gold. Now we bring to this is all about your point about if the BRICS do it, the US does it. Okay, we want to buy those Russian nesting dolls, and they want to buy our Lee jeans, and we can't agree on all dollars or all yuan. And so what happens is you need gold. So the BRICS platform, whichever one wins out there, okay, and the U.S. builds, and this is the Zoltan point, Bretton Woods 3 is a reevaluation of money for international trade. Yes. It's not what they're doing. It's not fucking Shanghai 3. It's Bretton Woods 3. Okay, so this is all in my head. Now I go back to that video and I go, now who are the people on this Enbridge thing? And who's in the middle of it? And you'll love this. Who's the middle bank dealing with the 4 Asian banks?
JP Morgan.
Banks.
JP Morgan Chase.
Okay. Well, it was rhetorical. I don't want you to guess.
No, I was asking. I was literally asking.
No, but
I don't know.
No, but it may as well be. It's the BIS. The BIS sits at the hub with their expertise of making sure people don't default. You know why? Because why do they sit at the now? I'll spin it out a little bit. The BIS is integral to this process because, as we know, the East doesn't have the technological financialization advancements that the West does. So the BIS. So if you bring in the BIS in, you're bringing the powers from Europe, you're bringing JP Morgan, you're bringing in all the people that have the one common ideology that everyone has, and that is capitalism.
Yeah.
So eventually, if the other ideologies don't blow it up, whether it be woke or communist or Marxist, what you're going to have is you're going to have the BIS, sorry guys, continually manipulating the price of gold to keep it stable so the BRICS can trade with each other, and then the BIS creating a hub of hubs, and we're going to have the U.S.'s Bretton Woods Street connecting to it, and international trade would go up. The point is, if the BRICS succeeds in creating a robust network using gold, at least partially, as part of their settlements, the West must counter. If they don't counter, you get Gresham's Law.
Yep.
Okay. The money goes across the barrier, right? The good money goes one place. Everyone, let's pretend you hate the dollar for a second, right? Oh, gold is better than the dollar. Well, if gold is better than the dollar, I'm not saying it is, but if gold is 100% better than the dollar, then we'll all be holding dollars, and all the gold will be with the strong people, right?
Yep.
And we'll be spending dollars, and all the gold will go out of circulation, and they'll have deflation, and we'll have inflation. They have to agree the preservation of the dollar as the currency continues, and to do that, they're going to do, if the Brits are successful, the West will have to, whether it be not spoken, because we don't want to damage the dollar, whether it be behind the scenes, whether it be an embedded option, gold will be part of the calculus that values the dollar if the BRICS are fully successful, which, as you said, is about the network. You got to get enough spokes on the wheel or the wheel doesn't turn. Right. That's the network.
Yeah. No, I think that is clearly what's going on here. The commodity producers are saying to you, look, your debt is your problem. My commodities are also now your problem. Right. Going back to another Zoltan Pozar note about our commodities, your problem. And the means by which they're going to enforce this is that, look, we're the commodity producers. You have no balance sheet room left in order to suppress the price of our commodities anymore, and then effectively colonize us. And then try and hold us underwater through debt slavery and the IMF and the World Bank, and all that's ending. So now let's bring in the real battleground, which is Egypt, South Sudan, all these other countries, right? The ones that the Chinese and the Russians are out there encouraging to default on your IMF debt, and Pakistan is right in there. I just saw something before you and I started. I saw something with why did Imran Khan get arrested? Because they know he's going to win the next election round, and he's already ready to default on the IMF.
Right. Oh yeah, that brings me back to. I'm not going to get into it, but
because that is the linchpin to the entire private equity financialization, freaking the spin laundry that's been going on for fucking 70 years now or longer. It goes all the way back to the friggin' bank formation of the Bank of England. So all these people need to be friggin' removed from and that's look, once you get rid of that, right? Once you get rid of that, then there's an easy negotiated settlement. I'm going to bring up 2 points about this because I've been asked about this multiple times from multiple people. And I'm going to tell you, here it is. Here's my official answer on this because I've been asked literally 100 times. One, I'm going to bring in the one is, why did Jamie Dimon just go to China?
We're going to talk about that.
Why? Well, we are. And then the second one is, well, I counter with, well, how about this one for you? The Baker Noodle. Why did Jerome Powell meet with high-ranking members of the PBOC not a month ago?
Right.
For the same fucking reason that Dimon is there. They're negotiating the terms of the divorce. But they're still going to trade with each other. But the globalization, and they're trying, I think, to alleviate China's fears that the neocons are out of control and are going to attack them. And so, in effect, like, we don't need to have a financial war. We're going to stop these fucking people here and we're not going to have a war. I don't know whether they're going to be successful, but I know that's probably what Diamond and Powell are both trying to combat.
They want to do trade.
Right. They're not dumb.
And it's a negotiation. I'm going to add a couple things to that.
Sure, please do.
That corroborates, and the other is about, we'll get into Jamie Dimon, but
sure.
The cooler heads are Powell and Dimon, because they both survive and they both want to make money and they both want to preserve things. And your comment about, I forget what your comment was, but it reminded me of an analogy. You've got two fighters, you've got two people that can't get along. They're going to extremely neutral corners, but threads still connecting them.
Yes.
And Powell and Jamie Dimon and whoever else are keeping that thread connected. And eventually, when this Cold War is over, they'll be brought back together. But between now and then, without trade, you have war. And that's actually a European statement. So they should know that.
Yeah, and when you think about where Diamond and JP Morgan are they are now, them and HSBC are the two sole custody agents for all of GLD's gold.
Right.
We have Jamie Dimon's JP Morgan is the sole custody agent for all Russian equities overseas in US, in Western capital markets. Very important. Very important, because people still trade Russian equities even though we're not allowed. There are all these things that we keep seeing, these things happen where JPM is in the center of all this, continuing to keep the lines of communication open between.
For the 20-year-olds on Twitter, I just want to say this. Jamie Dimon's like a 3 million follower influencer. Right. If they say something to him, he's going to listen to the other side.
Whenever Diamond speaks, you have to listen to it very, very carefully, because he speaks for the New York Fed.
Right, he does.
This is not hard.
If he's coming in backwards, at least what he's doing matters.
Yeah,
that
too.
Bitcoin sucks, and then next week he's buying it. That type.
Well, yeah, I mean, there's always that too. But he buys it for his clients. He may not like it, but he doesn't. But there's a reason for that. That's because he understands that Bitcoin is actually, I don't even think Diamond hates Bitcoin that much. I think Diamond understands that Bitcoin, like gold, is another one of these bearer assets that will be used to help recapitalize the United States when the time is right. The time is not right now. Right now, crypto is the plaything of these freaking international globalists to suck liquidity out of the rational capital markets and into the fictitious capital markets that they created on top of Bitcoin. And
the bank runs. Yeah, I'm sorry.
Go ahead. That's all.
The JP Morgans of the U.S. are healthy frenemies with the Fed, meaning when their prospects are aligned, they hate Bitcoin. We don't want the dollar to be virulent, but when the prospects are not aligned, as they were, you have the whole woke versus establishment banking. So, yeah, I mean that's a big deal. I wanted to bring up in the context of Jamie Dimon something that I wrote about and did a 3 a.m. video. On Monday at 3 a.m. I know.
That's why I love you too. 3 a.m. in the morning, your brain kind of shut down, and you're sitting there on. Exactly. Yeah, I know. I'm saying.
So one of my mutuals on Twitter sent me something translated from Chinese, and I had a moment. Right. I went, oh, this makes sense. About 2 months ago, I had written saying, again, a little bit of conspiracy, a little bit of geopolitics, a little bit of understanding who benefits. China, there's a statement, China owns gold through its people. And people say, oh, okay, well, one of the comments of that is that's how China, that's the balance sheet that they don't carry on there. And they can always confiscate it if they have to. All right. So now moving forward, the question that I asked about 6 months ago is, why is China all of a sudden, or 3 months ago, why are they all of a sudden announcing that they're buying it? Mm-hmm. Why everyone know all of a sudden? Why are they no longer being secretive about it? So I put that in a little box, right? And then the imports go up, and then the whole brick stuff happens, and I go, oh, and in the back of my mind from 2017, I know that Russia and China were doing oil for gold deals. So they had their blockchain tested out in 2017 or so. All right. So now we come back to the present day, and I say, oh shit, blockchain exists. China owns gold through their people. If they want to buy more gold, they can throw this little osmotic filter in there, because gold that goes into China doesn't go out of China, whether right. So now they can just say, if they could just tell, it's like say, tell everyone in China to buy an ounce of gold. Well, it's a gram, right? Tell everyone, because they're in grams, right? 10 grams, who cares? If every Chinese person did that, the price of gold would explode. The arbitrage from east to west would get out of whack, and
Right.
someone like India would step in and capture the money. Okay, so I went. The next step is, and I think the title of the article was gold's going to be taken public by China or something like that. But it was a coalescence of some ideas, and it came down. This is right before Jamie Dimon went. Okay, and the idea was that China would somehow, and I'm not perfect on this, but I'm like, China is having a hard time getting their citizens to use central bank digital currency. Okay.
Right.
That's because culturally they don't trust. In the 200 years of stability after 5,000 years of chaos,
Right.
you can understand culturally that. So they all put their money in gold. Well, if you're holding yuan in state-controlled, authoritarian government accounts, and if China says, we'll let you buy gold with that money, they'll be like, sure, we'll buy gold with that money. We'll take it. And then China says, we'll let you buy gold with that money, but we'll watch it. And they're like, I don't want to do that. Well, the choice is either you have yuan or you have yuan with gold attached to it. It's like, okay, we'll take the gold. And then at 3 a.m. in the morning, the tweet comes out. China has opened a connection between your money savings account at the state level and your state gold bullion account. So your checking and your savings are linked. How linked are they? Well, you can, if you have the money here, you can in real time, it's a little central exchange. You can in real time buy gold digitally. They'll store it for you and you can use it as a medium of exchange.
Mm-hmm.
I'm going to buy a can of soda. Which account? This one? Boom. All right. So that's what happened at 3 in the morning. And I'm like, that's it. They just took gold public and eventually they'll probably migrate it to the CBDC. And then and by the way, sidebar, that's one of the reasons over the last 6 months, you've seen the press become so friendly to gold. U.S. government is encouraging citizens to own gold again. And that's what's going to happen. I'm not sure it's happening.
And the reason, and there's multiple reasons for that. That's one is what you just outlined. That's brilliant. And then the second or third one is all the things that you and I we've talked about in this podcast, which is that there's an incentive to bring gold back into the conversation because that's what's going to repair the balance sheet.
We're going to need it.
Right? We're going to need it. And guess what? It's like, look, what has Turkey been doing for the last, in order for the Turks to have any semblance of banking stability?
They have to be buying gold because there's defaulting on
look. But in the last 10 years, the Turkish banks have had in Turkey, gold is a tier 1 capital asset. It's a fully reserved asset.
Right.
Like the only banks in the world that have gold not on the balance sheet as a fully reserved asset for the banks. And well, they did that, of course, so that they could launder the money for the Iranians who were cut out of SWIFT. But that's right. But that's part of it. But it's also Erdogan setting up the stage for the Turkish banking system to get out from underneath of the economic hitman, IMF, World Bank thing. And you can see how the Turkish lira has been under unbelievable stress because of their current account deficit, because they're an energy importer. So what has extreme energy importers? So what has Erdogan been doing? Been working on bringing in gas from Russia, having Rosatom build them nuclear power plants. Like he's doing what needs to be done while the middle class is getting wiped out by the hyperinflation because all the hot money flowed out of the country. There's nothing Erdogan can do about that. You can raise interest rates 135% for Christ's sake, and you're not going to stop the hot money flows if it's ideologically fucking driven.
Right. Well, he's doing Erdogan is doing in 5 minutes what the U.S. will do in 50 years. So basically, he's saying, I'm going to mine the middle class and rebuild myself. That's exactly what he's doing. I totally agree with that.
And we're going to have the same situation here in the United States.
Yeah.
Bake your noodle. And now that they think about it, right? You just said, I got news for you. Gold is going to be, there's going to be convertibility. People are going to be able to hold gold in savings accounts at local banks by the end of the decade.
Wait, in the U.S.?
Yeah.
Okay.
It'll happen. Or it'll be the gold back, or we'll have gold back bonds.
I'm going to agree with you. I want to agree with you, but I'll give you the obstacle.
Of course, there's many.
No, but the domestic obstacle, aside from ideology, practically, is regulatory. There's no regulatory agency in China that's preventing a physical commodity because it's not a commodity to them. It's money. Over in the U.S., gold is a commodity. Gold is a Hummel. Gold is a tchotchke. You can't have a gold account. And so because CFTC...
But at the same time, gold eagles still are printed with a face value that if you try and pay your people in it, you go to jail. You go to freaking jail for IRS fraud, for tax fraud.
Exactly.
Someone is going to have to read. This is where the change at the institutional level has to occur. This is where the political counter-revolution that I've been talking about for months now has to mature. This is one of those questions. So now we get into the debt ceiling fight, because that's what's going to tell you which faction is dominant on the Hill. How the debt ceiling fight resolves. Not that they're going to raise the debt ceiling. They're going to raise the debt ceiling.
Of course they are. Of course
they are. The question is, are they going to raise the debt ceiling with some rational spending cuts that go along with that in order to fix the fiscal situation, which is horrific? No. Yellen and Yellen wants to do yield curve control, for fuck's sake, and Biden wants to spend and continue spending like in ways that make drunken sailors embarrassed.
But you know what's going to happen in that situation. I mean, I want to finish with Diamond, but you know what's going to happen with that. You and I are sitting there looking at it. I'm not saying we're thinking that way, but we're looking at with the analytical knife. Where are they going to come down? It's like, we know they're going to raise this debt ceiling. To synopsis what you're saying, it's how they raise the debt ceiling that tells us our likely path going forward. Yep. And these fuckers will drop the knife in a place that makes us go, I still don't know. It's like, oh, they're cutting back, but they're not. It'll be a lot of bullshit. Anyway, so.
But wait, that's just fine. I'm okay with that. I'm okay with McCarthy. The important thing about this, and what I said in the article that I wrote on this recently, was what matters here is that for the first time ever in any of these debt ceiling fights, we have a split Congress. So the fiscal conservatives actually have all the goddamn power. Because
I know. That's
the key. When Gingrich had a 53-seat majority or whatever, who cares?
Right.
The rhinos could just undermine him and get rid of him, which is what they did. But when it's 4 people and Matt Gaetz and 3 other people go, you know what? Fuck you. Vote of no confidence against Kevin McCarthy. Give us a real speaker.
Right.
The whole thing collapses.
It's an episode of West Wing.
Right. Yeah. No, it's fantastic.
No.
So it's fascinating, right? So here's the thing for you. I want to go through this really quickly.
Give me homework.
No, this isn't homework. You guys can't see it. I've got the H.4.1 report from the Fed, the balance sheet report from the Fed in front of me on my other monitor. All right, I'm going to tell you how much Janet Yellen's fucking lying about the default that's on the horizon on June 1st.
Okay.
So as of May 4th, and we're going to get the new one today, and we know what this looks like. The Fed has, maturing within 15 days, $107.6 billion, and with a B, billion dollars worth of treasuries that are going to roll off their balance sheet.
Right.
We have, from 16 to 90 days, another $282.6 billion with a B, billion dollars that the Fed's going to roll off its balance sheet. So at $95 billion a month over 90 days, that's $285 billion. And oh, by the way, within 90 days to a year, there's $657 billion that's going to roll off the Fed's balance sheet.
Right.
Janet Yellen has more than enough money just from the Fed, not asking, just rolling those off the balance sheet and retiring that debt. More than enough fucking budget room to fund this government for 6 freaking months.
Right.
She's fucking lying through her teeth.
But what are we missing? I agree with you, but what are we missing? Is there some expense that we don't know about?
Maybe, but I'm looking at this going, come on, man, you guys can make this work. And the latest thing this week, I just saw a tweet from Daniel DiMartino Booth. It was like the Treasury General account dropped by $40 billion.
Right.
Tax receipts were better than they thought they were going to be. That extended. No, the Fed is literally giving you $95 billion worth of borrowing room every month, and you're complaining, and you're only running a loss of what, $40 billion a month or $50 billion a month? Stop spending the money. It's not that hard. Stop spending the money. You can do it. The Fed wants to get $2 trillion off the balance sheet. You can stop spending. You don't have to increase the debt at all. We can get the balance sheet room back, but you want to fill that balance sheet. Then you want to refill that balance sheet by, I don't know, cranny bathrooms and QE and cranny bathrooms and all
right, exactly. But financially, Yellen wants to do another QE, which
of course. So she's doing yield curve control.
So basically, as it rolls out here, she wants to buy them back there.
Right. No, and you can say, Vince, I the other day yesterday actually for my Wednesday market report for my patrons, I sat down and I went and I was looking at the yield curve, right? And by the way, the 5-7 and the 7-10 spread are now positive.
Right.
So the belly of the yield curve, I've been watching this for last couple of weeks, though, is starting to normalize.
Right.
The long end of the yield curve starting to normalize. So I went back and it's like every Wednesday I went back like 6 weeks. And it's like, let's see what's going on. Let's see what it looks like. What's the trend, right? And I'll tell you what the trend looks like. The trend looks like this: the long end of the yield curve wants to rise, wants to normalize,
right? But
it's not. Well, it is, but it's doing it slowly.
I know what you mean.
And everything around the 1 and 2 year bond is in the spreads are getting worse because Yellen is selling friggin' 2s and buying 10s, just like she said she fucking would, in order to make the 210 inversion worse than it actually is, in order to keep her thumb on the scale so that they can keep writing headlines to bail out the ECB and that fucking neck scarf wearing cunt Christine Lagarde. That's what this is all about.
It really is.
And while they try to navigate the end of LIBOR and then hold us blackmail hostage like Cleavon Little with a gun to his head in blazing saddles and saying, raise the debt ceiling or the U.S. gets it. Right. You know what I mean? This is the same thing.
That's funny. That's funny.
You can friggin' people.
You can boil ideology down into the 2s and 10s yield curve.
Yeah.
If what Yellen is doing supports Europe and what Powell is doing doesn't,
destroying it, and at the same time they're executing all of these oligarch back. Danielle made this point in the latest Blockworks interview she did. I was like floored. I guess she had been mentioning this, and I finally looked at it. I'm like, all these banks that are going under, all these big super regional banks, they're all shitty San Francisco, California lenders that were lending, $1 billion to Obama to buy a third mansion on Martha's Vineyard, or to give Mark Zuckerberg a friggin' $1 billion loan against his Facebook holdings. They're not real banks.
Tech bros,
yeah, they're not real banks. They're not like your regional bank that backed a library in Palatka or a new school in Newburgh. Like, fuck you. That's not what these banks are.
They were,
it's all those banks.
I thought about that and I said, oh, look, they're all regional, they're all tech. And then I said, that's my bias.
Yes, me too.
The yield curve, right? And then I went and looked at my little bit of a woke bias. I said, that's my bias. Let me look at the data. And then I looked at the fact that they were borrowing from investors at 0, and they were lending at 1% to the office, right? And I'm like, okay, so they're making 100 basis points. And then the Fed raises it to 5. And now they're like, our depositors want 5%. And now they're losing money. They never fucking hedge their interest rate risk.
Nope.
And so I said, coming back ideologically, I went, oh, these fucking banks that were just lending money to tech companies, they were just playing the flow of cash coming in. And as soon as they had to manage their risk, they blew up. And so you're right. They were.
And guess what happened? Jamie Dimon bought First Republic. Why did Jamie Dimon buy First Republic? Because you didn't want these banks to get out from underneath and slip up. And this is the tell for me. The same weekend that the First Republic blew up, Apollo Group, the PNC backed by Apollo and BlackRock, wanted to buy First Republic.
Right. There was a competitor. I'm like, PNC, this is what I said. Like, PNC is not in JP Morgan's league. They're big, but why would they be competing? So I didn't know they had Apollo with them.
No, the Bloomberg ran the article. Somebody tweeted it at me, and I went, "Oh, that's the linchpin." And that's when I wrote the article about BlackRock, CFI, and all of that stuff, because I'm like, "Oh, this is how they want it." Yellen wants to bail out BlackRock by making them a CFI.
Right.
And BlackRock for 15 years, like, we're not a CFI. No. And now all of a sudden they want to be a CFI. And it has, what's the easiest way to get BlackRock to be a CFI? Systemically important financial institution that's under Dodd-Frank that would put them in, like, what would do that? Well, if they get a bank. On their balance sheet, now all of a sudden it makes it so much easier for them to turn around and like it's so obvious.
Now it's obvious to me. It's like PNC is a super regional. They're not in JP Morgan's league, but you got JP Morgan and Bank of America, and they got PNC, like the old WAMU or whatever you want to call it. I'm like, and that's what I said. I said, they're not big enough. Now that you're telling me it's BlackRock, et cetera, I'm like, oh, they're weak enough to take money from someone else to be a player in the game. And that player in the game ends up getting the CP designation.
Yes, that was the case. So that now they can be bailed out. And what I've been saying, where did I immediately go? To the nationalization of the pensions that BlackRock has sucked to the gills with all their CLOs. Whereas, and this is where Danielle, and this is the last point we're going to talk about, because otherwise we're going to be here until I run out of voice, and it's already at an hour and 20 minutes. This is the thing we want to talk about, and the shift from private equity to private debt. And this, and what Danielle was saying the other day is this, and it's so good. What she said was the following: well, at 5.5%, you've got money, good loans on all these banks' books, but they've got holes in their balance sheet. They can go out and they're getting offers from private lenders to say, hey, we'll buy that debt off of you at 85 cents on the dollar or 90 cents or 80 cents on the dollar. Maybe it's got a 6% or 7% coupon. Now all of a sudden it's a 9%. Now it's all of a sudden a 9% yield if it's a 6% coupon against $100,000 par value that you're buying for 80 grand. Now do the bond math, and all of a sudden that's a really good investment. And oh, by the way, the pension funds can easily be the buyers of all these bonds, of these loans, and now they can go into being private lenders and get real yield without leverage, as opposed to having to go to BlackRock for some CLO fund, and now BlackRock's going to get fucked. This is and on top of all of it, it allows for the deflation of all these free credit-based assets and all these it's all good, because then all this stuff starts to come down. The BlackRock is holding the entire renting population of the United States freaking hostage.
That's right.
But this shit, Martin Armstrong was banging his shoe on the table about this the other day. I was like, oh, absolutely. And I'm like, and you can see it. You can see this coming. And I'm like, that's why they want the C fee. And this is important, because that's a way to, this is one of those other mechanisms by which to recapitalize the regional banks and get rid of the unfunded liabilities of all the pensions that are out there.
That's right. You get to draw a line of who's worth saving and who's not.
Yes.
I have a question about this.
Sure. Right, it's very early days on all this. So I know this is one of those eureka moments that hit me like a ton of bricks Tuesday morning. Right.
It's hitting me now. So let me. I just want to say it again. Make sure that I'm just getting it right before I ask the question. All right. Mm-hmm. So among other things, because you have banks with good assets on their balance sheet, and they're not going to use those other facilities because it's a telegraph of a bad situation, they're going to be approached by other entities that will give them much more than the market would, but enough to give them a higher interest rate of, say, 9%. Okay, fine. So whatever that is. All right. So if you want to make your pensions whole and unencumber the balance sheet of banks that have these assets that are performing but not liquid, you want to transfer that balance sheet to the pensions, pay them some VIG for it, and that's your private debt concept. The pensions get made whole, they get a nice rate of return. The banks, they lose income, but they clean up their balance sheets and they can function again, not as zombies. Is that what you're saying?
Yeah, that's kind of what I'm saying. And the pensions also get what they want desperately, which is, and the insurance companies, by the way, they both need duration.
Oh, they need duration.
Yeah, they need duration. No, they don't. They need, for them to get 5% in a 3-month T-bill is nothing. They need 10 years.
They need all that shit.
They need duration, right? So it's both of these things all at the same time. And once they have that, right, then their reinsurance and everything else, they go away, because now they have stable cash flows out 10 years. Now their future liabilities are that much lower. And this is when I brought this up, one of my patrons who's a financial guy, this is what he does. He's like, and he brought all this up. I'm like, thank you, because now I have that talking point under my belt.
Right.
Because so go ahead.
Here's the piece that I'm missing. Okay. Just in this, obviously in this early embryonic stage of understanding this.
Sure.
Who's the middleman? If it was private equity firms, who's the private debt firm?
I don't know. Like this is what I don't know, right?
You don't
So,
want one ideally.
ideally, I would just think that the pensions themselves,
That's what I'm thinking.
yeah, they would just go out into the market, and just these opportunities would just start falling. The banks would shop this. Maybe this bank shop this stuff around. Maybe there's a private debt. Like there's a private debt fund that's out there.
I'm just saying, I don't want another cottage industry that comes up that gets in the middle of it and fucks it up.
Yeah, of course. I mean, so I don't know. I mean, but that somebody's going to be in there, and maybe during the extreme portion, the early stages of this, there's going to be somebody doing this stuff. Right. But at the same time, like there's a lot of money out there that's looking for yield, and they don't want to take on leverage at this in this environment, but they want the stable cash flow.
This is actually brilliant. My actionable takeaway from this, and going to that level, is I'm going to keep an eye on California, because that's where it starts.
Is to do what?
I'm going to keep an eye on California because
absolutely.
That's where they'll be the mover.
Yeah, absolutely. This is, and when you take this one step further and you go through the entire thing, it's very clearly the New York Fed going after the San Francisco Fed and going, you're not bigger than we are. Wall Street is bigger than Silicon Valley.
Right.
And that also implies that Wall Street is again bigger and putting the kibosh on the military industrial complex centered in California. Like there's a thing here that we
intentional or not, there's fallout. Is that what you're saying? What
I'm saying now is that intentional or not, but you look at it and you say to yourself, okay, so what does this actually mean in in symbolic logic terms? Which players and all of this stuff? You go, well, that means that Wall Street now controls the purse strings of the military industrial complex, and if Wall Street doesn't want to go to war with Russia and China, Wall Street's not going to war with Russia and China.
Right.
Yeah, I mean. Look,
no, that's a logical play out. I see that. No, I see that.
Fair, right? And I maybe I've got it wrong. Maybe they want to do the same thing they've done in World War I and World War II, and lend to both sides and blow the world up. But I don't think that that's the game this time, because I think this time it's not about just killing people in trenches or with conventional dumb bombs. This is the end of civilization. This is nuclear war, and the end of civilization. And under those circumstances, I think we have to assume that even the bankers don't want to lend to both sides in a nuclear war.
Right, but you and I both know that if the Fed and the Wall Street types hold their ground for whatever reason, ideologically or just straight up capital,
right?
The woke side of government, the Yellen side of government, will somehow subsidize the military industrial complex out in California.
Well, they'll try, but eventually they may lose. But eventually, again, it comes down to who's in control on Capitol Hill.
Right. I'm not. Who's.
No, I know you're not. I know you're just like playing out what you have to the next level of the analysis, right?
Right. Wall Street wins, no military. Wall Street loses, military. Okay, where's the answer in the middle? Whatever Yellen can probably fucking pull out of her ass,
right? Or whatever, or again, whatever Diamond is willing to and company are willing to fund, which is border guards and no outposts in Syria and blah 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 blah, and
give us access to China.
Yeah, and no more, and this is why CNN giving Donald Trump 70 minutes to do a town hall last night, and Trump just like killing it while they, just killing it. I'm like, by the way, he just won the election when he said, look, I can have this war over in like 24 hours and everybody stops dying. And she kept trying to do the struggle session thing saying, no, tell us whether you support Ukraine or not. And he's like, I'm not answering that question because you're a nasty woman and I don't like you. And it was great. And he got up and yeah,
I'm not even a Trump fan, and he won.
Me either. But when he kills it, he kills it. Like give him due when he give him his due.
Wait, drill baby drill. He brought back that. So he was. So did
it's almost like Jamie Dimon was up there running for president. To be honest,
right, exactly. And the funny thing is, people don't understand that. All politics aside, Trump is, and I knew this when he first got elected. Trump is, in economics terms, considered a classic corporatist.
Yes.
As opposed to a financial corporatist.
Yes.
So he's like, the real estate matters. Because he's a real estate guy. Yeah. The real estate matters, not the financing.
Yes.
I'm just my debt. Fuck you. A classic corporatist, by the way, this is a coincidence. I'm not trying to steer it that way, but classic corporatists were in control of the economy before we went off the gold standard.
Yep.
So if a classic corporatist is speaking sense to more than 50% of the population, He's echoing Jamie Dimon, to your point, right? And he's protecting the Fed, classic corporatist East Coast. We're in a new era, man. Financialization is dead.
I know. That's what I think. I think this is coming, and it's so hard for me not to see it, like coming at us like a freight train. And it's not just I'm making people angry when I do this now. I do it on purpose. So if Uncle Jamie and Father Jay get their way,
right.
And I know everybody feels guilty. It's like my image of Angela Merkel in the cheerleaders outfits. They're like, don't fight over me, boys. Like, I know we all need mind bleach when we have to hear that stuff, but that's the way. If I can get it through to you that way, you're never going to forget it. And it's like, it's the old Patton line that I give it to you loud and dirty, so that, it sticks. Right. It's the same kind of thing. Like, look, I'm not saying they're good guys. Like, that's not what I'm saying. Right. But I am saying
they want to make money.
They're good at making money, and they know that you don't kill the golden goose, which is the corporate and the legal structure of the United States, which is still, for all of its faults, and still better than everything else that's out there. And with a proper construction of the Supreme Court, like reviewing the Chevron doctrine, for Christ's sake, we can actually get back to some semblance of reality and sanity. And of course, they're going to, unleash the brown shirts on us and try and take us out.
It's amazing.
We can't have our guns. Amazing. Sorry, dude.
No. The U.S. is a, people say the U.S. is a nation of laws. Fine. Mm-hmm. But and it's not a culture, it's a society. And there's a lot of problems with that because you have homogeneity in other countries. But the thing is, if everyone more or less obeys the rule of law, we're going to get through this. And so, of course, there's going to be, people that cheat. But the point is, that's what ties us together beyond ideology. There's a law. You can't just fucking ignore it. And so that's why, patriotically speaking, we're going to survive this.
Yeah, no, it's very interesting. And I just got a note from one of my patrons just to end this discussion about Jamie Dimon. He said, it's actually posted to the front page over my Patreon page. Tom, I'm a long-term listener to the podcast, and I just became a paid subscriber because I listened to an interview with Jamie Dimon that occurred yesterday. And he talks about the debt to GDP problem, complains about how the regulators tricked the dumber banks into buying treasuries and then rug pulled them, says he, quote, wouldn't put any money in sovereigns, unquote. And generally repeats a lot of gold bug talking points, except instead of concluding, so I put all my money in gold, he says, I put all my money in the RRP, the reverse repo facility.
That's right.
I've been on the fence about this is what this guy said. I've been on the fence about your New York banks versus Davos Globo Homo commies theory. His words, not mine, folks.
Right,
but this interview convinced me you're right. It's on Bloomberg that Dimon did a podcast and going over all this stuff. And, again, drill, baby, drill. Right. Went to Davos this year and said the oil is going to be with us for the next 50 years and the Fed's not done raising interest rates. So, buckle up, Chachi. Right. The fight's on,
That's the thing. I mean, if you're looking at this through the proper geopolitical and ideological lens, everything that you're saying to people and myself, it allows them to lay a grid out and see what the most likely thing to happen next is. Yeah. So when Jamie Dimon says what he says, your listener can go, that fits in. So it's like another piece of the puzzle clicking for all
another piece of the puzzle clicking into place. Vince, this has been unbelievable. And I've really enjoyed every minute of it. And we'll do it again in a couple of months, and hopefully we'll get on another hopefully we'll get invited onto the same Twitter space and we can do we can do something somewhere else. Maybe I'll try and set up a 3-way on one of the shows I'm a regular on. I think it would be good for you. And
that'll be fun.
It'd be fun. So, all right, I'll pop your name around as good guest. Do you want to listen to this guy?
I appreciate that.
That'd be fun.
And I'd be happy interviewing you on their shows because a lot of people just don't ask the right questions. I'm like, wait a minute, what the fuck are you talking about, Tom? Anyway,
look, dude, I get that enough from I get enough of that review from my own partner going, dude, you can't just give them the answer. You've got to lead them through it step by step. Right. I'm like, yes, okay, I'm sorry. It's like, It is what it is. All right, man, you take care. You have a great afternoon and we'll talk soon.
Awesome. Thank you.
Thank you. Well, that'll about wrap it up for episode 143 of the Gold, Goats, and Guns podcast. I want to thank my guest, Vince Lanci, for a truly stimulating and interesting conversation. We had a great time. And I really enjoy Vince's time and his diligence and his company and all of that. So looking forward to having him again on the podcast at some point in the future. So with that said, we have a lot going on out there, and we'll be back soon with another episode. And you can follow my work, as always, over at my blog at tomluongo.me. You can follow me on Twitter at TFL1728, and you can sign up over at Patreon / Goats and Guns to get the monthly newsletter and support everything we do here. Thank you for listening. You guys be well. You take care. We'll talk soon. And keep your stick on, you guys.